Hello, welcome to this week's Trade with Precision free newsletter. You are speaking with Hao from the Trade with Precision trading team. Today, instead of looking for a potential trade setup, and I'm going to share my analysis with you on the S&P. Because I believe S&P right now is at a key point, whether the bullish momentum is going to continue or is just a start of a new downtrend, which means a larger pullback is due. So start from the monthly chart. You can see this is the S&P 500 futures contract. Longer term wise, this is still in a very bullish momentum. Price is a little bit away from its moving average buy zone, which is somewhere over here. And last month's candle, it is a indecisive candle, so which tells me some signs of a weakness is coming into the market, because we can see the price is going up 1, 2, 3, 4 months in a row, and last month there's no buying momentum at all, but also there's no selling momentum because we can see the low price has been rejected as well. So that's why I say the S&P right now, or the US market right now, is at a key point for the chart. On the weekly chart, the trend is still very strong, and last week it has printed a really strong bullish candle inside the moving average buy zone. So probability wise, if the price breaks the high of last week, then the price is more likely to continue to move higher, at least to retest the 2400 again. So that's on weekly chart, longer term perspective. But what makes the story a little bit interesting is on the daily. So daily chart is actually has reversed into a downtrend, lower high and lower low. So this is in a very early stage of a downtrend. So, and also the price, where the price is trading right now, exactly now, is a major support resistance on the daily chart here. A pullback last week up to some level, or you may call this bottom of this final drive up candle, and start to turn south from last Friday. But yesterday we can see the price try to dip down to a very low level, but being rejected off the low, and close is almost the same as the opening price on Monday. So this tells me a really strong buying momentum at the bottom, but I say really strong enough to push the price higher. Still not really, because the close is still below the high of still below the open of yesterday. So that's why the coming 1 or 2 days is going to be key for the US indices. So if the bullish momentum want to continue to the upside, I want to see this major high, which is here, has to be clear first, because this is the major pullback on the daily chart, and also the bottom of this final push up. So if there's a daily candle that can close above this major high, then the daily trend will reverse into an uptrend, because we already have a potential higher low on the daily. So what the chart has to resume its uptrend is an higher high. So that's why we want to see the price break this high to form a higher high here. So that's the first scenario. If the bearish momentum takes control of the market, then this low, or the Monday's low, is going to be very key. If it closes below this low, then all this lower high will confirm a strong selling. Then the price is more likely to continue to break, at least continue to move lower to retest the low back here. So that's why a little bit more patience is key in the coming days for the US indices. So I'm keeping a close eye on between these two levels, so just share with you. the bottom of the Monday's candle and the top of last Friday. So in between these two lines, and I'm not going to do anything about it because there's no real momentum right now, or the direction is very unclear. So a message for you guys is be patient when this kind of conflict information present on the high time frame. Okay, hope that helps everyone, and see you again next time.